Hi there guys, welcome back to the EdgebyRS Academy. I hope all of you had a profitable last week. For those of you who are watching this recording for the first time, let me inform you that this is a new initiative I have taken up for the community whereby I'll be talking about one or two trades that we've executed over at Discord every week. I'll be walking you through the structure, the context, why I took the trade, where I pulled the trigger, and I will also talk about something which very few traders talk about, that is the other side of the coin. Why did I not, hypothetically, why did I not take the other side of the trade, right? Because it's very important to recognize what ultimately drives a decision, and any decision that we make, we do consider two sides of the coin, because that's how you want to approach trading, and then you want to see which sides weigh heavier or which side has greater confluence, which ultimately lets you pull that trigger. Now, before I get started, a quick one. If you guys are interested to join my Discord or my Substack, you will find all the details on my Twitter bio with the website links. So if you do like my content and you want to learn more, feel free to join. And even if not, you enjoyed this recording, you can always drop in your feedback or any concerns that you may have in respect to trading, which you believe that I could cover in the next recording. I'll be happy to do so. So without further ado, let's get started. So I am going to walk you through the session of 9th May. First, I'm going to talk about the market structure. Second, I'm going to talk about the context and the trade we took over at Discord. And third, I'm going to talk about the alternate scenario, which is if shorts had any merit. And with that, I will wrap it up. So first, the structure. The structure is something that if you guys are reading my weekly plan, which is there on Substack, you will find that I had shared this past week a very simple looking chart which clearly stated anything above 5160s, 5150s, buyers are in control, and as per the basic standard balance rules which everyone knows is acceptance back above, and we are talking about a potential rotation all the way to the top, with the balance half back being the point of decision. So what we knew is, as we were into Thursday already, we know that anchor balance had been reclaimed on a gap up, which means that is 2x buyer control. So think about it. You reclaim the upper balance on a gap. That is strength, guys. You do not want to think otherwise. And of course, if you go back and look on Twitter, we even had taken longs of 51.64. But since we are not talking about any other day, we will continue to focus on the 9th. So we had anchor balance reclaim plus gap up, that is buyer strength. Thereafter, observe, right? What happened on Monday? On Monday, we reclaimed 51.50-60s, followed it with a spike above 51.94. Again, if you've read my weekly plan, 51.94 is a very, very important level. And just to give you a hint on why it is important, go and look at the previous ES contract. The high was at 51.90s, and that is one reason out of the many why that level is important. Now, come into Tuesday, what happened? Again, it was a balanced day, nothing material happened, which means buyers kept holding, consolidating. Come into Wednesday, and that's the same thing we observe, that we backtest 51.94 on a gap down. So in theory, gap up, buyers in control, gap down, sellers in control. But look what happened on Wednesday. Well, sellers fumbled. What did it tell you? We held an important pivot. Sellers had their best chance to act on a gap down, but they failed. That just tells you buyers continue to be present, which means at an important level, at an important pivot, you still want to buy the dip as long as supported by the context and ride those long runners. The only time you want to switch sides is on failure of 51.94. And then on Thursday, look what happened. We reclaimed 52.18.22, which in my weekly plan was already stated as a minor pivot, and over at Discord I had clearly stated to all my members, I'd shared with them, ES is now locked between 51.94, 52.20s, break either side is where trend will be found. Now, for a lot of traders, break, acceptance, rejection, losing a level are vague terms. But with us, what we have is something called a list framework, line and sand framework. It's a simple 4-step framework that we follow, which allows us to identify acceptance. Of course, we don't use this framework independently. We also bring in the context to support our trade. But over here, you can observe on Thursday how we reclaimed prior resistance, that minor pivot, got the list framework, which are simple 4 steps. So step 1 is a breakout. The subsequent candle, the entire body must close above the pivot. So that is step 2, confirmation of the breakout. Step 3 is when you get a retest that holds, the entire body of the candle must hold. And step 4 is where you engage, as long as, like I said, the context is supporting the trade idea. So what we've observed from Monday morning into Thursday is we've not lost an important level at any point in time. After that massive gap up that we've seen and the rally we've seen off the lows from FOMC the week prior, yes, markets are bound to take a rest a bit, right? That's pretty standard, pretty natural, and that's exactly what happened. Nothing bearish occurred, no levels were lost. We kept holding what the level that was supposed to be held. And here you go, again you have another pretty clean list framework here, which doesn't find more than 10-point traction below, which keeps us very much intact. And any drop that you see here is actually during ETH or US pre-market, not in RTH. RTH continued to hold above. So it's very important to make that differentiation, levels that test during ETH and the significance, and the levels that test and hold during RTH and its significance. So on the day, on Thursday, I stepped in and I went, guys, I'm going long at 52.02, which is the balance halfback. The halfback that I'm referring to is the anchor balance halfback, the balance I just showed you guys here at 51.57, 52.46. The halfback is around about 52.02. So my reason to explore along was very clear. We were holding a major pivot. Number 2, we reclaimed the balance halfback, which is my second confirmation. We were back inside the value of the prior day, which was my third confirmation. And the fourth and the most important one, guys, the pivot 52.18.22. Go back, look left, and you will realize that was the scene of crime, the origin of the 300, not 300 exactly, about the 250 point odd drop. That is the origin. And guess what? We rally all the way back up into that same origin, that scene of crime. And what do we observe is the pullback is weak. Not only is it weak on first test, guys, it is weak on the second test, third test. It gives a gap down, but is unable to find sellers. What does it tell you? It tells you that the scene of crime or the point of origin is lacking strength, which means any sell that had to occur last week had to be of this level, because this is where it all started. And what happens? Weakness. Now, the fifth point that allowed me and gave me even more confidence of executing my trade at 52.02, of course I shared my live entry here, is that we formed a higher low. When I take it from EU, which is essentially pre-market or ETH, to ETH, what do I find? A higher low. So now you put the entire picture together, and what is it that you see? You see no pivot was lost, sellers failed twice. The point of origin from where the sell occurred, or accelerated rather, did not find traction. And on a higher time frame structure, we are back into balance, into the upper balance, which means we're talking about balance rules and rotation, which is exactly what happened by Friday open. And we lost no important levels. And it's important, guys, to even know which levels are essential. And that is where my weekly plan comes in, right? So each trader defines their own level of importance or interest. I have my own reasons for picking these levels. And this is something that I talk a lot about in Discord. I share with my members because it's very important you understand why certain levels unlock the next leg higher or lower. Which levels actually tell you there's more upside to come? Which levels tell you there's more downside to come? Not all levels are equal is what you must understand. So in simple words, each level has a story and you need to get that story right to be able to execute, manage and trade confidently. So as you can see, trades were executed live, called out live, and the breakout here, list confirmed, break above the IB high. So this is more important, right? None of these sessions truly found acceleration above IB. Now this is a change of character. When you see something not happening over the last 2 or 3 sessions and then happens, that is where, guys, you recognize there's a change of character. Very important to note these subtle patterns that develop across sessions. Now, coming to the third part is what was the alternate scenario to this? Was there enough to explore a short? Well, no. The answer is no. Because any short you would have taken at early 5200s would be shorting into the hole. Why do I say shorting into the hole? Because you would be shorting into the open or session lows of Wednesday. You would be shorting into the London low. You would be shorting into my major pivot. A pivot which I've clearly defined as a level that unlocks further upside. I've not indicated 5194 as a level of resistance at any point in time, right? So if we lose this pivot, yes, the dynamics change. Now, a loss of pivot requires a similar list framework or a high tempo move or a gap down, which really tells me that sellers are in control to beat this level, which is 5194. All of this was absent. In fact, we reclaimed, and I recall we had the jobless claims, if I'm correct, on the day, and even jobless claims did not manage to backtest 5202 or 5194, continuing to confirm that the level is of importance. Because if there was any potential weakness, trust me, we would start seeing with the price action post the jobless claims. We did not see this. All we saw at the open, backtest of the jobless claims low or the point of origin there, found buyers, stepped in, and from thereafter the trend began to break to the upside. So the reasons were clear. We didn't want to short. We had a lot of confluence here. We would also be shorting into the spike base from Monday at 51.99. So you cannot short into a cluster of references, and vice versa. It even goes to even longs. You cannot long into a cluster of references, and this applies even more when you know which side is in control. So in this case, on Thursday, we already knew buyers are in control, right? That is exactly what even my weekly plan suggests. Buyers will seek to find acceptance, which means above 5150s, it's all about the buyers, and the final target is 50 to 36.48, something we traded into Thursday end of day and Friday. So this is how we put the entire picture together and were able to trade successfully off it. And with this, I will wrap it up. I hope this was helpful. I would recommend each one of you to journal this, to backtest, to understand, and of course, as always, if you guys have any questions, you can either drop it under my tweet send me a direct message. And if you're part of Discord, then you can directly send me a direct message as well. I wish you all a good and a successful week ahead. Take care.